Welcome! You're viewing the video version of the Pirls Stock Market Commentary featuring the proprietary bull-bear point and figure market breadth summary chart for March 20th, 2016. Market breadth. With this past week's market advance, our bull-bear point and figure ratio at 1.80 rose from 1.64 last week and pulling back into strongly bullish territory. The total count of securities in bullish or bearish patterns rose 5% to 3,141. The count of bearish stocks decreased fractionally, while the count of stocks in bullish patterns increased 9%. The Pirls P&F Market Breadth Summary Chart shows us a market now 2 weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly email version of the Pirls Stock Market Commentary free of charge, simply enter your email address in the space provided. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 147 points for the 19th advance in 29 weeks. At a positive 5,252.31 points, it has risen above the November 2014 and February 2015 tops and continues below the 4 additional tops above plus 100 and above all 6 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in accumulation mode with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 3 accumulation days and 2 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on lower average daily volume. Momentum, now at a positive 124.03. The CCI 20 daily rose last week back above plus 100 without a valid zero-line reject, so we continue to wait for a valid Woody's zero-line reject trade entry signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's downtrend 5 weeks ago, while the daily CCI 20 began a Woody's uptrend 3 weeks ago. The CCI 20 weekly continues in a Woody's trend down. It rose last week to a negative 3.33 from negative 25.50, continuing within the plus or minus 50 range for a valid zero-line reject short entry signal if it falls next week. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and 4 of the bottom 5 are negative. Bullish, comp tech, REITs, and semis have entered the top 5. Networkers and semis have left the bottom 5. Oil and oil services have left the top 5. Oil services has entered the bottom 5. Bearish, disk drives continues in the bottom 5. Computer hardware has entered the bottom 5. Brokers has left the top 5. Focus this week from www.zerohedge.com. A strange pattern emerges when trading the US dollar in 2016. Since it is short, but in our opinion highly significant, we present the post in its entirety below. One of the more surprising market developments of 2016 has been the violent obliteration of those who had taken part in the biggest consensus trade of 2015, namely the long USD. As the Fed finally admitted earlier this week, the U.S. economy is sputtering and is woefully incapable of handling 4 rate hikes, or 3 for that matter. In fact, the Fed will be lucky to push through even one more rate hike without the Chinese yuan collapsing and unleashing even more capital outflows, which precipitated the major market swoons in the summer of 2015 and early 2016, arguably the main topic during the alleged Shanghai G20 Central Bank Accord. The result this week saw the biggest 2-day USD collapse against a basket of foreign currencies in years, and currently the DXY is trading at a lower level than a year ago. However, to say that the dollar sell-off is a development would be incorrect. As Bank of America points out, dollar selling has been going on for the past 3 months. But what is more curious is when, during the day, this selling has taken place. As Bank of America's FX quant strategist Vadim Irilov writes, ahead of the Fed, the USD was already trending lower against 8 out of 9 G10 currency pairs, with GBP being the only exception. The surprisingly dovish Fed has only further accelerated the decline in the US dollar. The decline started in late January and has occurred during the critical local New York trading hours. The US hours downtrend looks likely to continue in the near future. What becomes immediately visible when one looks at the chart below is that all of the USD selling in 2016 has taken place during US hours. This, according to B of A chief FX strategist Athanasios Vamvakidis, means that the market moves would be consistent with EM central bank interventions. Perhaps, if true, it would suggest that some very notable EM central banks, a polite euphemism for the PBOC, have been dumping the USD during US hours, which in turn would explain the coordinated attack against the USD, now with Fed participation, ever since the Shanghai G20 meeting, although it would not explain why Japan or Europe would be willing to piggyback on this trade, as while China wants a weaker dollar, Europe and Japan want the USD as strong as possible. Whatever the reason, and whoever may be causing this odd temporal divergence, thanks to B of A's observation, an interesting arb emerges. Buy the USD during Asia and UK hours, and sell during the US day. Sit back and collect the profit. Then again, now that this trade has been exposed, and every FX trader sure to jump on it, we would expect precisely the opposite to take place. Dollar strength during US hours offset by weakness during the rest of the trading day. We will update readers when the temporal regime changes, which we are confident it will in the not-too-distant future. Thank you for tuning in for this week's Santu Pirls Stock Market Commentary, featuring the proprietary bull-bear point and figure market breadth summary chart, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant Palm Sunday, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.